Ready to ride the market waves? We're diving into swing trading, your express ticket to short-term profit. First, what is swing trading? It's about catching price swings, holding positions for a few days or weeks to profit from those ups and downs. We're not talking long-term investing. This is more like grabbing quick opportunities. One key technique is trend following. Spot an upward trend, buy, see it reversing, sell. Simple as that. Identify entry points where the price starts moving up and exit before it dips to low. Range trading is another strategy. If a stock bounces between two prices, buy at the low, sell at the high. Look for stocks that repeatedly test these support and resistance levels. Then there's breakout trading. When a stock punches through a resistance level with high volume, that's your cue to jump in, anticipating a continued upward move. Now, let's talk indicators. Moving averages smooth out price data to show the trend. RSI tells you if a stock is overbought or oversold. MACD helps you spot changes in momentum. Use these tools to confirm your trading signals. Risk management is crucial. Always set stop-loss orders to limit potential losses and profit targets to secure your gains. Decide your risk tolerance before entering any trade. Stay calm and disciplined. Don't let emotions drive your decisions. Patience is your friend. Wait for the right opportunities. Don't force trades. Before risking real money, backtest your strategies using historical data and practice with paper trading. This helps you refine your approach and build confidence. Consider diversifying your portfolio across different assets to spread your risk. Don't put all your eggs in one basket. Remember, the best strategies adapt to market conditions. Use trend following in a bull market, range trading when the market is sideways, and be cautious in a bear market. Tailor your approach to what the market is telling you.